Hey, I just wanted to come on and rant a little bit. I have been working with my assistant now. I have this great assistant. She is helping me uh, edit these videos, put them up on the YouTube channel so that I don't have to do absolutely everything and I can focus more on client acquisition or the latest coaching assignment or whatever. And she's been making these videos and using AI to generate some of the captions and stuff. And in the last video that I did, I talked about the how the rules are changing for the USA investors and that something to worry about when you're reporting because the centralized exchanges are going to send your information to the IRS at the end of the year, but they're only going to send them the part that says that you sold crypto. They're not necessarily going to send the part that says you bought crypto that was worth something. And what this means is if you only have the exchange saying you sold crypto, that number one means that you need to report, because if you don't report and your exchange says you sold crypto and you don't say anything about it, then the IRS has the right to come after you and be like, hey, we see you sold crypto. Why don't we have any money from your gains? So that is a big audit flag. But the way that the AI is generating the captions and everything, it kept describing this that I described. Uh, as an audit flag if you don't report the cost basis. Now, let's get this straight, because if you don't report the cost basis, you will be paying lots of taxes. But the IRS doesn't care if you report the cost basis, because what works out is, hello, I sold a Bitcoin for $100,000 and then I don't report the cost basis. That means that I'm reporting gains of $100,000, and that means I'm paying taxes. And if I'm in the highest tax bracket, for instance, I'm paying 37% of that. So roughly $37,000 in taxes. Now, the IRS would be happy to get $37,000 in taxes, and they're not going to flag your account for an audit because they would like to keep $37,000 that you mistakenly paid them, because the truth of the matter is most of us paid something for that Bitcoin. And it's up to us to report the cost basis. So number one, like if I bought Bitcoin 2 months ago and it's at 120,000, and now today it was at 95,000, that is $25,000 loss. That's not taxes. That is, I would not pay any taxes on that particular transaction, and the $25,000 loss would offset 1-to-1 the gains that I might have in other things that I've done this year. But if I don't report that cost basis, now I'm paying $37,000 in taxes. And there's a huge difference between a $25,000 loss that helps lower your other taxes and paying $37,000. That's just a lot. Okay. The other, so she was generating all these headlines that were like, don't get flagged for audits because you didn't report your cost basis. I was like, no, that's not the way it works. You will not get flagged for an audit because you left out your cost basis, but you will get flagged if you haven't reported. So if the centralized exchange is reporting that you have sales and you are not reporting that on your taxes, that is going to trigger, pretty sure, an audit. Other things that might trigger audits are if your numbers don't match. So if the centralized exchange says you have $100,000 of sales and you say, oh no, I only have $20,000 of sales. No, you actually have to make sure that the records match, so that if you have $100,000 of sales, but you have $80,000 worth of cost basis, and that brings your gain down to 20,000, that's a totally different story. But if you only reported $20,000 of sales and the exchange is reporting $100,000 of sales, that can trigger an audit. The other thing, there's two other things that you need to watch out for, and one is your date of that you've been holding the assets. So if you bought it more than a year ago, the tax rates are lower. So maximum capital gains rate for Bitcoin that you've been holding for a long time. So let's say I bought Bitcoin when it was $60,000 back in 2021, and I've been holding it, and now I've sold it for 95,000. Okay, so that's a $35,000 gain. So number one, I want to report that I paid $60,000 in the first place. But then the other part is I want to report that I purchased it in 2021 and not this year. Because if I have purchased that Bitcoin and it's been stored in my Ledger wallet, for instance, and then I moved it into Coinbase and immediately sold it, all Coinbase knows is that you had Bitcoin, you moved it in, and you had it for like 5 minutes, and then you sold it. And so it's going to label it as a short-term sale, but the actual sale is actually long-term, and that gives you a much preferable tax rate. So this is the second thing you want to watch out for when you're reporting your taxes next year or this year, is that you really want to make sure that you've got your cost basis giving you as much optimization as you can. And then you want to make sure that you have your long-term dates. If you have had assets that you've sold that are long-term, you want to take advantage of those. The last thing you want to be aware of is when you turn in your taxes. So you're either going to load it into a tax software like TurboTax, or you're going to give it to your accountant. And the thing is, if you're getting these 1099 DA forms that they're sending out, I'm pretty sure that TurboTax and your accountant will happily take those 1099s for you and upload them into your file. All well and good. The issue is that if you're using a separate crypto tax software to track your actual gains and losses with the cost basis, with the correct dates and all that, like we tell our clients, we say, okay, we're going to get all of your data into coin tracking, and then we push the report button and we say, give this to your accountant. But you have to be super careful and tell them to make sure that you are not double reporting. Because if you are reporting that $100,000 sale automatically from the 1099 DA that has no cost basis, and you're reporting the $100,000 sale that has a cost basis of $120,000, and so now it's $20,000 loss. Well, great, the $20,000 loss offsets a part of this that you have the second double report, but I'm pretty sure you don't want to pay taxes on that. So you're going to have to be really, really insistent and double check this with your tax preparer or your tax software, that you are not double counting when you turn in your taxes next year, or you will way overpay your taxes. You have to add in the information from the 1099 DA, like it's automatic. What happens with my accounts is, I think it's a 1099B for trades. So I get this 1099B statement, and then I take that, and I actually have a spreadsheet I keep for all of my trades, and I give that to my brokerage with the correct cost basis. There's a couple things I usually have to fix every year. Most of it's right, but there's just some nuance. And so when I fix that and I give that to my accountant, he makes sure that, okay, we've got the 1099, and we double check. He always double checks and makes sure that if the 1099 is reporting $100,000, I'm reporting at least $100,000 on my statement, and that the numbers match. And I spend most of my time getting my taxes ready is making sure that my numbers exactly match the statements that are being sent to the IRS from my brokerage. So that's super important, but I do not turn in the statements from my brokerage in addition to my statements. We only use one statement. He uses mine because he trusts me and he knows I know what I'm doing. And that's how we do it. So I'm telling all of my clients, you gotta, every time they turn in stuff and they're turning in a brokerage statement. For instance, we get a lot of people who have crypto in Robinhood, and Robinhood is great. They have been providing brokerage statements, and they're not so great about providing a way to get their data out of Robinhood so you can get it into a place like coin tracking. But we help our clients reconstruct that. It's okay. But at the end of the day, I go through and I'm like, okay, if you're going to report this on coin tracking, make sure your tax preparer does not report it over here, or your TurboTax or whatever you're using. You got to make sure that it's not double counted, because you do not want to pay too much in taxes. So that's my rant for today. I hope it was useful. If you have any questions about crypto, send them my way, and maybe it'll be the next YouTube video. Bye. And that brings us to the end of today's video. I hope you found something valuable or interesting in what we discussed. And if you did, be sure to hit that like button and subscribe for more content like this. Let me know in the comments what you'd like to see next. And until then, stay curious.